China's economy has always been a growth engine for the world's economy. However, recently we have also seen it has its own sets of challenges, just like many economies around the world these days. So are we going to see China's economy in a big rebound? The forum has put forward this wonderful question with a question mark. Professor Zhu here. So how would you answer that big question mark? Briefly, 2 minutes from you first.
Wow, it'll take us 3 hours.
The state of the China's economy at this moment.
Well, I think overall the economy grows well, right? The second quarter will be better than first quarter, and overall we will be able to reach around 5% of GDP growth rates. I think this is really, really important, right? But there's still a lot of comments, a lot of things people observe with different angles. For example, people see consumption is rebound, but it's not as strong as people expected, which is very understandable because after 3 years, COVID, right, and people have to repair their balance sheets and be cautious. So you will see the consumption rebound, but not as strong as people expected. Real estate is a rebound, but also not as strong as people expected. Real estate dropped roughly sales 24% last year, and also investment dropped 14% last year. It's a big drag for last year's GDP growth now. So this is a rebound, but it's not very strong, right? But this is a big structure issue because, first of all, there's a big oversupply. China have a total real estate supply of roughly 1.7 billion square meters per year. And in fact, the demand dropped to roughly 1.3 billion now because population, and peak, and also because per person, housing reaches 34 square meters now. It's pretty high. So it's a slowdown. So you will see the gap between the supply and demand. So how can we digest this 400 million square meter capacity? It's a big issue. So you will have a long-term structure change, but also on demand side structure change. Because before, most of them demand a first-time housing buyer, but now they only account half. Last year, it's only 6.5 million couple get married. Assume everyone buy a house, apartment, right? Assume they buy 100 square meter, so it's only account 650 million square meter, which is half of the whole demand.
Right.
So another half demand from the upgrading need. So upgrading do have a different need for the housing. So kind of market not necessarily to match with that. So the real estate sector will have a long time to restructure, go through the whole thing. I think the real issue for macro is to make sure the real estate will not develop into a systemic risk. Since last year's experience, I'm comfortable to say I don't think real estate will become a systemic risk. The only thing is we'll go through long-term structure change. I think the third issue is trade. Number is not very good. Everybody complains trade is slippery. One thing is global growth is slowing down, right, which is directly impact on China's trade. But also geopolitical also played a very important role. China used to be the largest export to the U.S. Today, the fourth, just in a few years, right? You can see the whole thing's change.
Right.
So this is also the long-term work gradually, see how things evolving. So how the China will deal with those issues? That's the most important things. Personally, I don't think real estate sectors and trade will have a cyclical strong rebound, as you mentioned. I don't think so, because this is a long-term issue. So real need, we need to find a new growth engine. Indeed, we did. So, for example, we take the manufacturing digitalization as a main drive engine for the growth this year, which works actually. China have the largest manufacturing sector for the whole world, account of 30.2% total global manufacturers, equivalent to total U.S., Japan, Germany, and South Korea. Those four account only roughly 29.7%. So manufacturing is really the strength of Chinese economy. I think we want to make sure the manufacturing work well and upgrading on the value chain. So digitalization is the key issue. And the CHAP GDP helps a lot to digitalizing the manufacturing. You will see those things move very fast in the past, will even be faster in the future. The second big engine is a carbon neutrality transformation. It's a huge, right? We expect to see in 2050, we'll invest roughly 180 trillion RMB into the total investments. And now with the solar power cost per kilowatt down to the 2 cents of US dollar, we'll be able to use the solar power to produce hydrogen. So that's a change in the whole renewable energy now, and also develop the new like a solar industry, and China accounts for roughly 19% of global solar equipment capacities. Like a windmill, 15 top windmill company, China accounts for 10. Like EV, total Chinese electric vehicle in stock is more than in Europeans. So this engine works well. So really, I observe the whole economy in a structure shifting and restructuring. So you will see volatilities, but that's okay. Overall, since we're matched, we'll move things forward.
Timeline-wise, if you could just one sentence or two, how long will this take from your perspective as an economist?
Well, I think manufacturing digitalization
That's a
and
trillion-dollar
carbon neutrality
question.
will take up to 2060.
Okay. Going to you, Professor Prasad. You've been doing research a lot on the currency issue and on how financial services and sectors likely to have an impact on the overall economic growth. Tell me more from your perspective.
So, Professor Zhu very nicely linked up the short-term as well as longer-term growth prospects of China. And context is really important here. China is now a $19 trillion economy at market exchange rates, and it's hard to envision an economy of this size and complexity continuing to deliver 8 to 10% growth. But even if China delivers modest growth, it's important to keep in mind that for the world economy, it is important that China grows, but also how it grows. Now, we've seen China already accomplish a significant amount of success in terms of its goal of rebalancing the economy, relying less on heavy investment-led manufacturing growth and trying to move up the value-added chain, which again is going to be good for China in terms of sustaining more robust manufacturing growth, but also making it much more environmentally sustainable, a topic that Dr. Zhu is making very important contributions to. In addition, the services sector has become a lot more important, and we've seen consumption playing a much bigger role in the economy. Now, all of this received a bit of a setback during the COVID period, and even over the last year. I think Dr. Zhu alluded to this. Private consumption has been somewhat weak, and last year, private investment was quite weak as well, with public investment driving most of the investment growth. And this poses some challenges, and I think it points to what needs to be done in order to accomplish both the short-term as well as the longer-term objectives. And as you suggested, Tian, the financial sector is really important to this. What I think China really needs in order to generate better growth in the short term, but also the medium term, is to have a better financial system that allocates resources in a way that is much more efficient to the most productive parts of the economy. We've seen a lot of credit going out of the banking sector and from other parts of the financial system, but whether it is going to the parts of the economy that can most effectively generate productivity growth and employment growth remains the question. And that's not necessarily the large state-owned enterprises that are into heavy manufacturing. It's more the small and medium enterprises. It's more the enterprises in the services sector. And that's really important as you think about China's longer-term growth prospects as well. Because with a declining labor force and with what I think is a desirable reduction in the reliance on investment, as we look to China's longer-term growth, we really need this economy to generate better productivity growth. And that is going to require a more efficient financial system. Now, as we come back to the short run, certainly there are some risks out there, including geopolitical tensions, where the property market is going. But I think these can be managed. What is really important right now is to ensure that the private sector has the confidence it needs in order to sustain this economic expansion, for households to go out and consume, for private businesses in particular to go out and invest. And what I think that's going to take is a combination of short-term macroeconomic stimulus, both monetary and fiscal, but also signs from the government that it is going to be serious about encouraging private enterprise, and will have a set of policies in place that will move the economy in what I view as a more positive direction.
I like this panel. Everybody's so straightforward. Like it. Let's go to the questions that you say can be very crucial. That is the confidence of the private sector and also some of the other areas of the Chinese economy. On that, we have a wonderful panelist sitting here. She can tell us what is the body temperature. Ms. Chan, you run a private company. Of course, it's running not only here on the mainland, but also in Hong Kong and other places in Asia. What is the body temperature you are feeling right now? And when these two distinguished professors of economy and finance talk about the solutions, do you agree with them?
If we believe that innovation, startup is actually the driving, like the steam engine of economy in the mid to long term, then I think then the capital, private capital market, like venture capital and also private equity, is super important. There are a couple of challenges here for us that we experience. One is that for a lot of the deep tech, it takes quite a bit of time to do R&D to get commercialized. And our sense is that generally Asia and also including China, investors, even though they are supposed to be early stage investors, they are investing in high risk projects, but they are very conservative comparatively. So we are still seeing most of our shareholder majority is still overseas, like international investors. So I think that is something that it takes a whole ecosystem to change the mindset a little bit. It's also supply and demand situation in the VC and the PE kind of capital market as well. And the other side also is the valuation. And we have been always like curious about giving the major market that we can assess here in China. We're talking about food product like meat consumption top in China, right, across like pork and different kind of type. But then it does not, even though our technology is very much like on par and some of our areas very unique among our peers, but valuation does not reflect that. So valuation actually translates to the amount of the capital we can raise. That also translates to the R&D we can, how much we can input into the R&D, how much pilot facility we can invest in, how much people we can hire. So that's kind of like a circle and related to each other. So there's a few things that we're experiencing here. And last but not least is the human capital. I think there have been saying that like some young people, they are lying flat. So I think that, you know, the work-life balance and mission-driven kind of thing is, these are the people that they are the upcoming major kind of labor force, as well as when they make money, they will also spend. So I think then how to make sure that they are equipped with the right scale like in view of all of the AI and all of the things we operate. Mm-hmm. We need a lot of talent in the bioprocessing and biological kind of research. And how do we find a lot of them so that we can support innovation in various areas? I think these are the three aspects that we feel quite a bit like upfront. Yeah.
Going to you, Professor Kupchan, to make things only more complicated. Geopolitics and also diplomacy. Of course, you're an expert on the Eurasian region. One thing, of course, is the impact of geopolitics on businesses worldwide, not just here in Asia, but elsewhere in the world, where you come from, North America as well. How do you see this role, the role of geopolitics now playing in the overall answer we can provide about China's economy, a big rebound? I just love this title, by the way. So I'll throw that to you, Professor.
So let's just take a brief tour of how that looks. In Europe, you know, the European Commission is quite hardline on China, but the European Commission doesn't make policy. Policy is made by the member states. UK obviously is involved in the EU, but the UK is the closest to the US, the hawk, the sort of European hawk. Then the French are in the middle. The Germans are much more concerned with their trading relationship with China, and I think less of a risk. Moving on, I think the Middle East is a place where Chinese business and Chinese capital has really, really grown in influence, and astoundingly so, in the Gulf especially. And the manifestation of that was the really kind of breathtaking Chinese ability to broker a deal between Saudi Arabia and Iran, which is the first deal in the Middle East during my lifetime that was not brokered by the U.S. Mm-hmm. And just to kind of round out this tour, which I think overall is quite impressive for Chinese prospects, in Latin America, trade with South America, Brazil and Argentina. China is by far the leading trading partner now, not so much in Latin America, but in the Southern Cone, China's done tremendously well. And finally, across Africa, since the 90s, China's economic relationships have really burgeoned and sort of gone beyond, at this point, big infrastructure, BRI projects, to much more sophisticated Chinese lending, which I think will probably be the wave of the future. So overall, it's not smooth sailing and only smooth sailing, but I think the overall picture for the context of China's growth, which my colleagues have described, I think is rather encouraging.
Make sure the income grows.
There is a problem. I think economies, businesses are facing that tremendously. The rhetorics are louder than realities.
Yeah.
And in political decision-making process, it seems that rhetorics are playing a bigger role rather than the realities on the ground. For example, about trade. Even though trade has been an interesting issue, but we see the numbers are going up. Last year, just an example. This year, we don't know yet. So how do you see that, well, putting Professor Kupchan's good advice in the backdrop?
Well, I think you correctly point out the rhetoric is much higher than reality. I think that's the issue. So for the business community, the key issue is you have to understand what is the noise. You have to screen all the noise to see the real reality, and basis on the reality, form your business strategy.
Right.
I think this is the issue. If you follow the rhetoric, I mean, you can go nowhere, right? I think that's the first issue. The second issue, so we'll see, from this meeting, I think it's very interesting. The attendants have a strong view that globalization is still on. Only the world is separated. So a lot of anti-globalization, a lot of the argument before say globalization is dead. But people here say, no, globalization is not dead. Because you need the productivity, you need the efficiency, you need the low cost. So you have to make the world work together. The globalization means specialization. The specialization means the interdependency. So what do you mean de-risk, right? So the de-risk will dramatically reduce the efficiency. So I think in that sense, it's what the business community hold a view of a globalization and push that direction. I think the reality will push back the rhetoric noise. I think that's also a very important issue.
Right.
But the third issue is, I mean, don't see all those tensions. We see Blinken's visit is constructive, right? I mean, we agreed quite a few things when we also signed a few deals looking for the area we can cooperate together. So you will see things sort of stop and go, things moving that way. So what I'm trying to say is looking for the long term, the globalization is the trend. Looking for the long term, US, China got to work together. Because we live only on one planet, right?
It seems that you are giving, all of you, are giving another layer to our topic today. Today, our topic is one limited to China's economy. But actually, should we ask a bigger question? Will rational thinking and actions a big rebound? I think that will be an important one for all of us to answer. So, Professor Prasad.
So Professor Zhu has correctly pointed out, building on what Professor Kupchan said, that we need to separate the noise from the policy. But I think we are at a dangerous juncture, especially in the context of the US-China relationship. You know, the geopolitical relationship was always a complicated one because there is intrinsically a zero-sum game. If China is going to gain a little more influence, the US is going to lose a little influence. So it's hard to avoid conflict there. But the economic relationship was, for a long time, seen as a more positive sum game, where both sides could gain, and that provided a counterbalance to the political dimension. Now, unfortunately, we're in a circumstance where even the economic relationship is seen as a zero or even negative-sum game, where one country feels that if the other country gets ahead in terms of certain technologies and so on, that it could have a negative effect domestically.
Yeah.
So I think we need to get to a more constructive place. And again, as Professor Zhu pointed out, it's good that the two sides are talking. Secretary Blinken was here. That a significant decoupling between the two economies would hurt both countries, because ultimately when these two large economies are at loggerheads on economic issues, it makes it much harder for businesses to operate in an environment of certainty, and every business needs a less volatile and more predictable environment. And I think even though the noise may not have any real effects, I think it is having an effect. And at a time when the US economy is cooling down, when China is facing some growth challenges, I don't think it's particularly helpful. So I hope dialogue at least will prevent these tensions from heating up even more, even if not de-escalating.
The reality of the world makes everybody a strategist. Let me go to you, Professor Gong. How do you see the new technologies are likely, and innovation and policies related to it, people's applications related to it, the market reorientation related to it, likely to influence China's economy, a big rebound, question mark? So where is China now?
In some field, quite good. For example, smart grid, power supply. Artificial intelligence, big data, Internet of Things is well used in our power grid in the past years, and that helped us to dealing with the pandemic, very difficult time, because people could not go to the fabric, but we have to keep power supply. So that is a big help, and also in automobile industry, big change has happened. EV has mentioned by Dr. Zhu, and that is a very positive trend.
There are a lot of discussions like that Professor Gong have just mentioned in China. The question is higher quality growth. Now, Professor Zhu, is it going to be led by some specific sectors, such as electronic vehicles, as you mentioned, or is it going to be a huge paradigm change that is needed in order to look at the overall picture of the Chinese economy?
Good point. I think it's a paradigm shift, because a high quality growth means a few things. Digital is number one, green is number two, inclusive is number three. I think these are most three important things for high quality growth. And it's everywhere, because digitalization is happening everywhere. You think about that. And the green is happening everywhere, right? So it's not leading by one sector. Yes, electric vehicle lead to the battery, and batteries are also important today. But it's really everywhere. Retails, e-commerce, and the manufacturers, shipments, and the research, particularly area for science, right? So it is really everything. I would say in 10 years, digitalization will basically in everywhere in the whole world. And the gradual green, right, in 2040, 2050, you will see it's all, sort of a carbon zero world now. So this is everyone's business. This is the whole society, holistic. I call really a paradigm shift.
Yeah. You see where China is toward that paradigm shift.
China is moving
20%, 40%, 60%, if I could just use some numbers.
Well, the number is hard, but China is moving very fast, number one, in terms of digitalization, right? If you looking for the Chinese e-commerce, looking for the data, looking for the software industries, and moving very fast. Particularly in the manufacturing, if you go to the company to see how much digitalization in manufacturing is absolutely amazing. It's really amazing. Now we got the U.S. restrictions on the chip, which also constrained on the computing power side, right? So, but we're going to build a computing network, to bring the plan for bringing all the computing power together in China, provide a computing service for all the different companies, like Madame Chen's company even can link with this platform. So I would say digitalization goes, and the green really goes very fast. I mean, this is incredible. For example, this year, China will install roughly 120 gigawatts solar power. which is roughly more than 45% of the global total capacity. I mean, this is incredible, right? And the windmill as well. So China's EV sector also moving very fast. So green energy, green transformation move very fast.
Talking about the digitalization, China is in the very fast pace of the digitalization. In the past 3 years, during the pandemic, the 5G telecommunication infrastructure has grown very fast. And now China has, I believe, about 4 million base stations of 5G model telecommunication is already working on the big part of China. Almost all middle-scale cities are covered by 5G. That's a very important digital infrastructure that will promote the faster industrialization.
Technology. Once again, it goes back to some issues complicated. You know what I'm talking about. So how do you see this momentum of technologies pushing the economies forward, but at the same time, the other side of the coin is that there are more complicated geopolitical diplomacy issues related to technology, applications of technologies as well. Of course, standards, trade policies could all relate to this. Professor.
Okay, thank you. Big question. First, I'm going to do a solution real quick. So during U.S.-Russia, when there was a diplomatic relationship, there was something called the Gore, Vice President Gore and Prime Minister Chernomyrdin had a commission that had all sorts of subcommissions. And it was too bureaucratic, but it ultimately worked. So as far as communication, that would be my proposed solution, and I offer it seriously. I think artificial intelligence is easily the biggest technological revolution in my lifetime. I think it has the potential to just overwhelm other revolutions in the sense that it grows and builds on itself so quickly. I mean, these large language models are sort of self-learning and self-training.
Indeed.
And the rapidity of change is breathtaking. Now, that is mainly good because of the productivity that will enhance, and Goldman Sachs and others have done the numbers. I don't need to tell you what the numbers are, we all know them. It also comes with risks which are going to be very, very difficult to control, in my view, because the tech companies know more than anybody else about what's going on, and they have a lot of money, probably more money than anybody else, and they have a profit model. So, go figure how you're going to really get regulation.
Can I add one thing on technology and geopolitical risk issues? Obviously, in everybody's mind, it's a chip. The chip war is the key issue, right? I mean, last night, I just heard a professor from Tsinghua told me China uses roughly 1,100,000 chips in terms of artificial calculating. So, I mean, this is a real thing, but only produce, 50,000. So we buy 95% of 1,000,000 So the CHIP Act obviously will put a tremendous support to the Chinese, artificial intelligence and the chip sector and digitalization. Clear. I mean, you have to admit that. That's very true. But there are several ways. Number one, now China will develop its own chip industry. We have to. America force us to do. Okay. Before we open the or buy from U.S., now we have to produce ourselves. China today can produce 28 nanometer chip on the commercial level. You will say, well, 28, it's way ahead. But 28 nanometer chip is a big market chunk because most of market implications use 28 nanometer chip. Right. Now we move to 14 nanometer chip, and we shortly will be able to commercially produce the 14 nanometer chip. And we move value chain quickly, I observe. I think this is very important. And meanwhile, it's very interesting, all the companies, major companies, heavily invest on the 3, 4, 7 nanometer, whatever capacities. And because the de-risking, they want to build their own capacity, there's an overcapacity issue in chip industry. Clearly, in 3 to 5 years, China will enter the market and export 28 nanometer chips, 14 nanometer chips, even smaller chips, the market will collapse. You will see things with overcapacity. And China imported $300 billion chips. If China don't import those chips, because China can't, right? And all those companies increase their capacity by, and really very high speed. The whole sector is in big trouble.
So what we're talking about is
I think
redundancy, right?
But
that's why we're saying division of
So what the
labor.
China's way is to try to develop our own chip sector, but also I want to say, I just mentioned, we try to build our own computer power platform and networking. Bring all the computer power together so we'll be able to facilitate what we need for various company need on the computing power. So I think the systems building is a very important infrastructure. Yes, the U.S. Chip Act put a tremendous pressure on Chinese chip sectors on the digitalizations. We'll find our way out.
And that's just one of those examples when
Yeah.
we're talking about technologies. Professor Prasad, briefly also.
So before he diverted to a slightly gloomier perspective, Professor Zhu very nicely articulated where we should go, both the Chinese economy and the world economy, and we talked about all the technologies that could get us there. I think there are other elements that are necessary to move in the right direction. Governments are going to play a critical role. Certainly technology is wonderful, but I think what we've learned with the variety of technologies is that leaving technologies to itself without guardrails create a lot of concerns and problems and lead us down into very dark paths. So effective government regulation is going to be important. Governments also play a very important role in providing a stable environment for these technologies to flourish, and that's true both at the domestic level and at the geopolitical level, where we could have many shared benefits rather than go down the path of fragmentation that Dr. Zhu referred to. But going back to an earlier comment I made, I think the financial sector is going to be very important as well, because you can have good policies in place, you can have the right sort of incentives in place, but you do need financing, a point that you alluded to earlier. And getting the financial resources going in the right direction is crucial, but it's equally important to have an inclusive financial system to make sure that all these benefits that are out there don't end up being cornered by the economic and political elite and are spread much more broadly, so that there is a sense of agency that everybody in the population has, and that we don't have a fragmentation of societies either within countries or across countries.
And make sure the income grows.
So I have finished my job almost. But my questions are not as smart as those coming from the audience. They are all practitioners, they are researchers, and they are thinkers. So questions, please.
Here.
Okay.
A question for Professor Zhu. You mentioned the challenges with the consumption recovery and the real estate markets. Wonder if you have any specific policy recommendations in terms of what kind of stimulus or policies China should take to address these growth challenges?
Stimulus policies coming from the government. Okay.
My question is more around the psychology of the Chinese people. So I think China's got to where it's got to through sort of fearless growth, but seems like there's a ton of fear that the COVID situation has created. So what can we do across government and businesses to reduce the level of fear in the population take more risk?
How to deal with fear, confidence. What can stakeholders do? Okay, good. Thank you. Next one, please.
So for Dr. Zhu and Mr. Prasad, I think recently the economy is under big strain. Although there is long-term, a very promising structural change, there are youth unemployment, all kinds of these very negative economic data. What do you think should be element of a basket of policy support to support the economy in the short term?
Okay.
What do you think is exactly the rational pace for us to developing artificial intelligence specifically?
Thank you so much. All right, so one is about, I think, policy-wise. What can governments do? Let's just generally say, talking about government, and then we focus more on China government, maybe central government, and even local government. Professor Zhu, Professor Prasad, I think these questions to both of you.
Yeah, I think a lot of expectations on Chinese governments to have more stimulation policies. I don't think this is real. I mean, China have a very high debts already, and also the current situation not necessarily is more structured, not you don't have to have a more macro. So the policy will be more structured. I think that's the first issue on this. On the consumption side is the whole issue is, for example, give more coupon with local authorities, one thing, encourage people to consume more EV, go to the rural area. But most important thing is 2 to 3 things. Number one, and make sure the income growth rate is higher than GDP growth rates for this year, macro level. Number 2, continue to improve social safety nets in terms of pension, healthcare, and all the other things. Number 3, and speed up for the people getting the hukou in the urban areas. I think this is 100 million people, and if we can move these people into the city, it will be huge consumer power. I think on the consumer side, it's really on the less issues. On the field, it's really a good issue. I understand there's a lot of field there. I think really the issues, we need a communication. We need to really take the fear away, rebuild the confidence. This is the most important thing. Everything started from fear. Fear is really the key enemy for everyone. We need to deal with this issue seriously. So this forum actually bring people together on purposely try to deal with this issue of fear.
Yeah, and we compare notes. Sometimes can reduce fear. Professor Prasad.
So rather than any panicky macroeconomic stimulus measures, I think focusing on the medium-term growth measures that I think are going to support more sustainable growth is, as Dr. Zhu correctly pointed out, really important to rebuild, sustain private sector confidence, and that I think is a key to both boosting growth in the short term and promoting better growth in the long term.
Yeah. Okay. Let's go to the technology question. AI. Professor Gong, maybe very briefly, 1 or 2 sentences, please.
Instead of pace, I would like to talk about the directions.
Okay, very briefly.
One direction for the AI development is regulation. We need global consensus as a base for the global regulation of AI development.
Global governance issue.
Another thing is to promote AI useful for production, for economic growth. That means from chat to product. That's another direction I'd like to mention. Yeah.
Right. Financial innovation or any other issues, Professor Kupchan, very briefly respond to any of the earlier raised questions.
Let me respond to the artificial intelligence one. I think what we need the most is sobriety and fear. At least in the West, the tech companies, in my view, is the Wild West. They're kind of broken loose. And so one way to get at them is national regulation, but I don't think there's the expertise or the money to do that. Another one is international, way behind the curve. If the UN developed kind of a supervisory body that could spot, detect, and interdict dangerous uses of AI in weaponry, that would be great. U.S., China, and I'll end with this. Another area where bilaterally we really need to develop norms. And most importantly, I think we need to develop some kind of an arms control, like the U.S. and the Russians, arms control. I think we need kind of a U.S.-China arms control arrangement on what's okay and what's just not okay in AI. Now, that sounds ambitious, but we're going to be in a whole lot of trouble if we don't do it.
Yeah.
I'm done. Thank you.
We need to do it urgently. We all agree with you on that. Absolutely. Ms. Chan, as a practitioner in the field, as a business lady, how do you see some of the earlier questions raised? What would you want to focus on?
Yeah, one I would like to react is actually on the point of fear, right? And I think the fear coming from we don't know what will happen kind of next year or something. So no conclusive solution here, but something like where from our perspective, something that is verbalized as a bottom line, policy or direction, talking about like describing what will be the approach under different scenario, it might help us to get a sense about, okay, what we can prepare ourselves for. So that will help alleviating some of the fear, although not everything. We know that it's all driven by external factors.
Well, what a conversation.
What a conversation.
But that's the world that we are facing today. And we are trying our best, I can tell, everybody here in this panel, I'm sure also in the audience. So what can we say in conclusion? It's almost impossible in one or two sentences. So if I could just borrow the wisdom of every one of you with one word, even more abstract, what will that be? Remember our topic, China's economy, a big rebound, question mark. I'll leave Professor Zhu later, because every time I call on you first. So, Professor Kupchan, one word.
Do the right thing.
Okay, that's very much a one-word thing. Okay, do the right thing, Professor.
So, I would like to talk about the fear. We don't need to fear the new technology, but we need to control it, to make the control in our hand. Control the new technology and use it properly.
Yeah, maybe sophistication of applications. I guess that's probably
Sure,
what
yeah.
you mean in terms of translation. Yes,
Yeah.
thank you. Professor Prasad.
Hope.
Good.
Well, is hope a strategy?
Good.
Thank you. Ms. Chan.
Human-centric, I think a lot of the thing, be it fear, be it training people and get them feel hopeful about the future, which is important for driving consumption. Human-centric policy is important.
Thank you. And Professor Zhu, one word or one phrase.
Yeah, brace the future, brace the structure change. Be confident.
My tremendous gratitude to our panelists on a challenging time, but an important question. Professor Kupchan, Professor Gong, Professor Prasad, Ms. Chan, Professor Zhu, what a pleasure, and thank you so much for your efforts. Our gratitude also going to the World Economic Forum for bringing all of us together. Thank you.